You are listening to KeyStone Stock Talk Podcast, episode 100. If this is your first time listening, then thanks for stopping by. This podcast is produced every week for your enjoyment, and show notes are found at www.keystocks.com. Come back often, and feel free to add the podcast to your favorite RSS feed or on iTunes. You can also follow us on Twitter at KeyStocks and on Facebook or via our 24-hour streaming radio station, pennystocks.fm. And keep submitting your stocks via the usual social channels or at our website, keystocks.com, for our Your Stock Our Take segment. And we just might review your stock in an upcoming show and let you know if it is a buy, sell, or hold. This week, we will, it's an anniversary segment or a session of sorts. It is our 100th episode, and we will not be handling, any listener questions on our Your Stock, Our Take segment. On the show, we feel it more important today to deal with the markets generally, and we'll touch on a variety of topics, including the COVID-19 virus, how it's affecting the markets, and how we see a slowdown in the markets and a lot of fear out there today. So we're addressing a number of topics. We also wanted to announce, just to kick off the show, I'm welcoming Aaron and Brennan again with me this week. How are you guys doing?
Well, that's an interesting question. We're managing. Let's just say that, like everybody else.
For sure.
You though must be happy to be back at home.
I'll tell you about our seminar story in a second online. I'll get into that, then I'll tell you about my journey back from Iceland, where
you almost got stranded.
We went through the traveling process. Yeah, we almost got stranded. So I'm going to say that we have moved, as everybody has really moved their seminars or business online. Our in-person DIY seminars have now been moved to 3 sessions that'll be live streaming our 2020 COVID crisis portfolio building. So strategies to survive, then thrive. There'll be 2-hour live streaming seminars. You can access them anywhere on any device, your desktop, laptop, or phone. Our live webinars, the Crisis Portfolio Building seminars, start on March 31st at 7 p.m. Pacific. That's the first one. That is already around 75% sold. Our second webinar is a week later on April 7th at 7 p.m. Mountain Time. And our third seminar is an Eastern Time at 7 p.m. on April 14th, so a week following that. Seminars will have relatively similar content, but we will be going through topics such as why sustainable dividend growth stocks that pay you while you wait are key in any crisis, why cash-rich stocks are king of any crisis, which to buy and which to avoid right now, why trying to pick an exact bottom in this type of market is a fool's game. We show you a simple strategy to layer into great stocks and decrease risk in a down market. We're going to look at some investment themes for the next decade: alternative energy, cloud computing, cybersecurity, and artificial intelligence. Find out which are right for your portfolio in a crisis situation. We're going to talk about how we've been through 2 crises here at KeyStone over the past 20 plus years. The last one being the 2008, 2009 financial crisis. At that point, we recommended 2 companies right away coming out of that. One was the Boyd Group, one was K-Bro Linens, very essential recession-resistant businesses. Boyd Group was at $2.30. It turned out to be the top performing stock over the next 12 years. So today we are on the hunt to find the next game-changing stocks for your portfolio. Just $20,000 put into Boyd during that crisis would have netted you over $1.4 million today, even with the decline we've seen in the market. So finding out if stocks generally are cheap or expensive, in our opinion right now, how to simplify your portfolio, pay less fees. That live seminar will end with a Q&A session with myself and Aaron. Plus, we'll give you 5 stocks to start buying in positions now in your portfolio for long-term gains. So that's a summary of those seminars. We encourage you, like we said, the first seminar, Aaron was on MoneyTalks this weekend. We'll get into that in a second as well. But that's 75% sold already in about 2 days since we put that out there. So there's big demand for this. We encourage you, if you want to attend that, log on to www.keystocks.com. Look up in the right corner in the big box. Look at my face, Aaron's face. Everybody wants to see them right now, I'm sure. You click on that, buy a ticket, get to that event, and we'll provide you some, hopefully some calming advice in a really fear-driven market. So, Aaron, you wanted me to talk about my journey back.
Well, you were almost stuck there in Iceland. I mean, you were stuck there for a couple of days. I'm really glad to see you back, mostly because I would have had to do a lot of your work if you were still there. But sure, why don't you take a little bit and tell us about that experience? Because I'm sure it must have been, you were with your family. I'm sure it must have been very, very stressful.
It's stressful mainly when you're with your family, right? And you just want to keep your family safe, get everybody back. We were scheduled to come back on Thursday of last week, and about 3 hours before the flight, we were just picking up to go to the airport, and we got the notification that our flight had been canceled, and we would receive a news on when we'd be rescheduled in some time in the future, but they had experiencing high call volume, so we tried to call in, spend an hour or two on hold. Don't get through. Fortunately, we were on Iceland Air, and their head office was literally right next door to our hotel. So I marched over and basically stood in the office saying, I'm not leaving until you get me on a plane out of here with my family. And they really, they couldn't do much. They were very helpful. They tried to be very helpful there. They handle most of it at the airport. So we were told to go to the airport, jumped in a cab, flew out there. Got in front of their sales staff, and they said, oh, well, you should have received an email already. Your flight's rescheduled for tomorrow, and we hadn't received anything. She clicked the button, then we received the email. So we were then rerouted to, we had a one-way flight right back to Vancouver, but we were rerouted through Toronto. So we went through Toronto and then had a 3-hour layover there. The next day we flew out, and we kind of gave a cheer when the airline came off the ground in Iceland. The whole plane did. It was a jammed plane, which it's hard to do social distancing in a jammed plane. But we flew into Toronto, and I have to say, the people in Iceland and the response they had there, we had anywhere you did a transaction, anywhere you did anything, there was hand sanitizer, signs up about social distancing. So when I flew into Toronto, I had heard, we're listening back to news from back home, and our PM was stating, and the PM's office was stating, that we had additional screening methods back in, at our main 3 or 4 airports that were opened. Well, a couple observations. The additional screening that we have heard about from the PM's office appeared to be limited to a couple additional questions on a screen, including where did you come from? And it was essentially, did you come from Europe or other places? And are you feeling ill? Well, to me, it makes a big difference, and the information would have been valid whether or not we're coming from Iceland or, for example, Italy. But that wasn't, we never had the ability to provide that at all. Then we faced an actual customs official, and we were just told at that point to self-quarantine, and that was about it. We were handed a piece of paper about self-quarantining. That was the extent of the additional screening that we're seeing. At the airport and at the vendors at the airport, there was no additional hand sanitizer or anything like that. No, I understand that washing your hands with soap and water is the best thing to do, but people were also lined up as usual with no social distancing at all these vendors. There was no, like I said, hand sanitizer, other than the ones that are always there. We travel all the time, and those ones are always there. At the transaction points, there wasn't any. So you'd wish, you hear that there is great screening and new screening measures going in. As of Saturday this past weekend, a couple days ago, there was nothing additionally really other than those couple questions. And it kind of is concerning from that perspective. I realize this hit very fast.
Well, I know 2 other people, Ryan, who came from international flights who arrived over the past week from overseas, and they essentially said the same thing, that there was no additional screening. Yeah. One of them said they weren't even told by the customs official to self-isolate. So it's and I've been reading some other articles online as well about people coming through with the same stories. So pretty disappointing, because you'd think that, you know, you're having a lot of Canadians come back overseas. You'd want to make sure that there's, you know, that you're questioning them and keeping an eye out, maybe even reading temperatures, like some countries are reading temperatures, but certainly verbally explaining to them the importance of self-isolation and what that means.
I didn't mean to cut you, but on that point on taking temperatures, we had a couple, and this is anecdotal, obviously a lot of this stuff is, but they had gone into the Ukraine, and they were their temperature was taken before they got off the plane. They weren't allowed to come off in the Ukraine before their temperature was taken. So, you know, taking it a little more seriously in those parts, it seems. And, you know, that is what we would stress to everybody out there. It's just, you know, you got to take this event seriously, for sure.
Absolutely.
So you were on Money Talks with Michael Campbell this weekend. How was that experience? How did that go?
Did a show. As always, it was I think it was a great show. I
second that. It was good.
Obviously, you know, the topic was not as positive as I would like it to be, given what's happened to the markets over the past month here. It's been, you know, pretty catastrophic. At the time, the markets were down about 35%. They're down a couple percent today as well. But really what we're focused on is, well, what do we do next? And that's what the DIY conferences are about. So we spent time talking about KeyStone strategy, right now what we're doing, if this changes the way that we look at stocks. And, you know, ultimately what we are looking to do is to invest in businesses that are making money, that can produce significant cash flow, have strong balance sheets, preferably net cash and no debt. And that whose growth and future profitability is not completely dependent on cyclical drivers. And that doesn't change. I would say that those principles become even more important in this type of a market, particularly the balance sheet. And we've always said, when you're buying a company, you have to make sure that that company is not overly levered with debt. And when the market is strong, when the economy is strong, companies are able to grow their debt balances, increase earnings by increasing debt, and get away with it. But it's when the economy contracts that they really get into trouble. So focusing on the balance sheet, what is different right now, I think, for us is that given the level of uncertainty, I would say that we're extremely cautious. Now, we're still buying stocks, but we're doing that in a very gradual and measured pace. So not aggressively going into this market. Even though the market's down 35+% right now, there's really a lot of uncertainty with respect to how this global shutdown is going to turn out economically over the next couple months. We just don't know what's going to happen, but we know that there is going to be a lot of financial pain felt across literally almost every sector. So we're being very cautious. We're doing a lot of research. We've built up a list of about 150 cash-rich businesses in our U.S. research. These are companies that have little to no debt, lots of cash, have profitability. So now we're going through those companies and determining, well, which of these companies are going to be able to maintain their profitability over the next several years and are well positioned in this type of environment. And then in our small cap research, we're doing something similar. We have a cash rich report, which will be coming out with small caps, Canadian small caps. And then for our Canadian dividend research, what we're doing is we're just going back through and looking at every dividend payer in Canada, every publicly traded dividend payer in Canada, and identifying the ones that we think have the best chance of being able to navigate through this crisis and come out the other end of it even stronger, while also paying a dividend to investors. So a lot of work going on, doing a lot of research, and then updating our clients with commentary as to where we see the market right now.
Yeah, and we'll be there every week on our 2 chat sessions for clients to log in and ask questions. And if they've got any questions or concerns, we'll be there each week for an hour on Monday and Wednesdays to answer those questions. And we're part of the things we're going to talk about in the seminar too is how you're trying to pick an exact bottom is very difficult in a market like this. And if you find great companies, good cash balances, good cash flow that have resilient businesses, starting to take a 25% position, and then we'll go on into that strategy of layering in those seminars. And if our clients want to ask us about that in the chat sessions, we're there, because we do believe and are very confident that there will be generational opportunities once again coming out of this crisis. There always has been over the past 100+ years of market activity. I know this seems like an event that is different from any other event that we've ever experienced in the market. And it is to some respect, but I believe in the resilience of individuals and individual companies out there. And the companies, we've been talking about buying companies with cash-rich balance sheets for decades. This doesn't change. It just becomes more of a focus now. And I think we will have those generational opportunities coming out of this. Now, I have one thing. I'm going to shift gears slightly here. I follow Twitter. I have an account on there. I don't post a lot, but I just kind of get the flavor of where the market is, or you can take a temperature of the market. Twitter, I have to say, is not really a bastion of positivity at the best of times, and tends to be alarmist generally. And it's flourishing right now in that regard. I picked off a couple of quick quotes that maybe we can have some commentary on right now. There was a quote, I'm not going to say who said this, but it's just a quote out there that's saying, "I'm the CEO of a small company that processes payments for small businesses. Our data shows that 50% of the small business revenue is gone already. Meanwhile, Walmart stock is at a record high and Amazon is hiring 100,000 people. No joke, we're on a path towards small business extinction, swallowed whole." Well, I'm not surprised to see small businesses have sales come down 50% in a crisis situation. A lot of those small businesses could be somebody making additional socks for people, or making scarves, or anything like that. Some of those businesses have grown very well in a crisis, in a recession, any type of recession. This is a unique one, but a driven recession. But you see a pullback in non-essential items. I can see on Twitter too that people are extrapolating that 50 to 70% decline forever on into the future. Now, it may last a year. It may last 6 months. We're not certain at this point. But, spending does come back. But the issue is companies that did not save for a rainy day, companies that did not have cash on hand for a downturn and over-leveraged. It does appear that, those are the companies we'll avoid, but it does appear that there's a huge generation also on the other flip side here of investors who have never gone through a recession. Like, this is what goes on in a recession. Sales of non-essential items take a big hit. It's a special case we see here, but it's typical for this to happen. It doesn't typically happen in a week's time or a couple days' time, but it does happen. You see non-essential items, the sales in those items get hit hard. It doesn't mean they don't come back at some point. So you have to, I would expect this to be the situation, having small businesses and a lot of companies out there face significant declines in their sales over the next couple quarters. That doesn't mean they don't come back at one point. So we need to understand that, you can't extrapolate out 50% sale declines forever in these businesses. So if you're watching Twitter and you're watching those sources and you see, end of the world type scenarios, I don't believe that we're going into an end of the world business type scenario here. I believe that there is going to be a significant pullback. People are going to have hard times in the near term, but we believe that there will be also opportunities in great businesses out there. And being alarmist and not having anything that we can do on the positive side in terms of pulling together as a society, I don't think serves anybody well.
But yeah, definitely, I'd like to agree with that. And the opposite's also true. I know we just kind of slightly talked about it earlier, but cannabis sales have kind of had a little bit of a spike, but we wouldn't expect those to continue to go on into the future, just because, of course,
that's your stockpiling, right? Yeah.
Just because there's been a huge run on toilet paper doesn't mean that society actually needs more toilet paper. Exactly. It means people are building up inventory, and
there's a lot of wiping going on. Right? Yeah.
I wouldn't necessarily go and buy toilet paper manufacturers right now. Possibly it's something you could look at. They're going to be making money over the next couple of months here, but it's not like you can now say that because sales in that area increased, 20, 30, 50% or whatever it is, that you can expect more growth going forward. Actually, you could probably at some point expect less when the toilet paper market gets completely saturated and people realize they have entire rooms full of hoarded toilet paper.
So all the stockpiling demand, at some point there's a gap where you don't need to fill that in, and these companies actually do worse at some point. Because, like we said, you're not wiping suddenly more. That doesn't suddenly happen. So you're just stockpiling. You're probably
conserving things more than you were before, if that's a concern.
So you're extrapolating demand and buying those companies, and like buying a company that supplies, some kind of medical service that's needed shorter term, is sometimes, you can't extrapolate that demand going forward. I mean, we can definitely get into talking about like changes in behavior. Like, and Brennan had mentioned that.
Of which there will be many. There will be many changes.
So those are themes. Yeah, those are themes that we really want to look at. Like, do people work more from home? Do you become more virtual? Do those services those are themes that can be extended long term. Like the short term buying of toilet paper or stockpiling in goods, like Costco is doing tremendously well, or your Safeways or Save-Ons that you can order online. These are doing extremely well short term. People aren't just eating more, they're stockpiling. So we don't want to extrapolate that demand out forever, but you do want to look at changes in behavior and how sustainable those are, and whether or not
I was just gonna say, so this accelerates the trend towards online shopping more than likely. A lot of retail operations will probably go out of business permanently. Maybe they were on track to go out of business, over the next couple of years anyways, but this will accelerate that. And a lot of people who have an online shop before are going to online shop, decide that they like it. A lot of business meetings, people are going to realize that that business meeting in face that took 2 hours didn't actually have to be done face to face. It could have been done with a couple email exchanges. Education, people are going to realize you don't have to sit in a lecture hall just to listen to somebody talk. You can actually do that
even
virtually.
in our business, we've been doing a good deal of our operations online for a decade, really. And it's becoming more and more accepted to conduct financial advice and services online. We're not, we see a pickup in demand. I mean, our seminar is 75% sold a day and a half after, or 2 days after releasing it, because people see this is the way, that we see in the future. There's more acceptance of these type of practices, and we can keep in constant contact with our clients. We've been having these chat sessions every week for a decade, twice a week. Clients appreciate that. They don't have to go into a branch to talk to somebody about a stock they bought or anything. They can just log on, ask the question, log off. And if if there's a question, or if that stock has something happen with it that week, they can look at our archives. So, these type of businesses actually, we're getting a bump in business now, which is nice to see.
Certainly. And I'd have to say, you also have to look at the flip side of, obviously some retailers are going to have problems, but then you also have to ask yourself, well, what does that mean for companies that own a lot of retail properties? The landlords of these companies, like shopping malls, were already under pressure, and people are transitioning away from shopping malls. That's probably going to accelerate now. And even office space too, if more people end up working from their homes, and it's unknown at this point the extent to which that would happen, but that would take demand away from office real estate, commercial real estate as well. So it's a very complicated time right now, and there are businesses out there that we're looking at that we're highly confident are going to do well in the future. As things digitalize, we have recommendations in the cloud computing space, data management, data analytics, cybersecurity. I mean, these spaces will continue to be strong. Staple businesses, automation. There's an argument. There's just what's happening just strengthens the argument towards automation. So companies that work in that area, which we also have recommendations on, imagine if we could automate more segments of the supply chain and of the healthcare industry, we would be better positioned to deal with this. So, Amazon had talked in the past about using drones to deliver supplies. Well, maybe every package doesn't have to be delivered by a drone, but in a situation like this, it would certainly be a benefit to society to have infrastructure in place where you can automatically deliver goods and services, or goods and packages, without any human involvement.
Yes, and then you got drones, or you got self-driving cars, so you got companies that we cover in those areas that are leaders. So yeah, I mean, it's and you talked about, maybe retail REITs, but do warehouse REITs become more with more shipping and more warehousing? And we just made a recommendation there, right? So,
we did.
Yeah. So I mean, ahead of this, and does that company, which has less leverage than a lot of REITs out there, does that become far more attractive now? We think so. So coming out of this crisis, who's in a better position? Well, that is one recommendation that we just made to our clients. So, it's probably well positioned at this point. So, was there other topics we were going to touch on today?
Brian,
you had a couple questions.
You had a couple questions.
Yeah, I've got, just taking a little bit of a tangent here, but, of course, it's not good for Canada, but oil has been hurting as well, as we all know. And I'm just, with our Canadian dollar being at one of its lowest points relative to the US dollar in about 18 years, I just want to get your guys' thoughts on, would we be hesitant to invest in the US? As there's quite a few companies that we have under coverage that are getting more into my price range that I'd like to enter positions even for myself. But again, just seeing that Canadian dollar very weak to the US, would you guys recommend clients, wait through the COVID, and then if the Canadian dollar is still that weak, would you still take positions? What's your guys' thought on that?
Well,
yeah, Aaron, you want to start?
Sure. So first of all, we continue to see opportunities in the U.S. And once again, we're not aggressively buying U.S. stocks right now, but there are certainly companies that we think are very well positioned to survive and thrive through this. They have a lot of cash-rich businesses in the U.S., a lot of technology companies that are at the forefront of innovation and solving problems like what we're dealing with today. So, and these are companies where there simply is no substitute up here in Canada. So absolutely, we would still be investors in the US. I wouldn't worry too much about the Canadian dollar. We've put out research before in our DIY seminars and shown how, because the U.S. market outperforms the Canadian market generally by such a wide margin, even in years where Canadian investors have lost a significant amount of money on the currency, they still benefited by investing in the U.S. market because the stocks down there performed so much better overall. So right now, the Canadian dollar is at about 68 cents. Before this crisis happened, it was at about 75 cents. That's only about a 10% difference, more or less, right? So you're talking about maybe losing 10% on the currency, maybe, but you have the opportunity to invest in companies that could produce returns in excess of Canadian counterparts far, far beyond that 10%. So we wouldn't, as long-term investors, we would not avoid the U.S. markets due to the currency.
Yeah, really good points. Like there's some companies that you just can't. There's no substitutes in Canada, and you don't. Like if you wanted to invest in a great cash-rich software company that has high, recurring sales, there's not a ton of those in Canada, and there's a bunch in the U.S. that you could look at. If you want that type of business, you're going to have to look in the U.S. If you suffer, a 5 or 10% loss in the currency, and the stock goes up 30%, you're netting 25 to 20%, and your equivalent. I mean, like the Canadian market is 50% resource, right? So, and financials, like there's sectors that we don't want to be in right now. So we want to look at these, not a lot of substitutes. The other thing is, you can also, there's a strategy that we also use for investing in, there's TSX listed companies that do all their business in the US. So they're taking their US dollars back, and they can be opportunities right now because you're converting back to Canadian dollars and you're getting paid in US dollars. And even if sales are flat, you have growth there in terms of the currency. Now, you don't make investments specifically for that. It has to be a good business to start with. But, there are some opportunities there. And companies that have held Canadian listed companies that have held US dollars, and suddenly they're worth in Canadian dollars a lot more at this point, and they make some purchases in Canada from that cash that's on hand. The other thing I would say is the Canadian dollar can always go lower. Like it doesn't mean that 68 is the bottom or anything like that. So trying to time a point where the exact point to get back into the market, you want to look at the businesses you hold in your portfolio, not the currency that you hold them in. To be honest, it's the great businesses that you hold in your portfolio that is most important at this stage. And
that's what's going to drive the performance long term. Yeah, I would say for our strategy in the U.S., which is a longer term investment strategy, we wouldn't pay much attention to the currency.
No. And we even hold a couple companies that are traded on the TSX that pay us a dividend in U.S. dollars, right? So that's very attractive right now. So it increases the yield, and it has. So continue to hold those businesses over the long term. So sorry, Brandon, I'll let you go.
No, that was good. I appreciate the answer. That's very thorough. And yeah, it's good. Like Aaron actually pointing out, it's only really depreciated, 10% relative, where we've had some companies that have outperformed the market drastically. And when you're taking off a 10% currency exchange from, an 800% return or something like that, or even like a 400% return, really it doesn't mean much. So no, thanks for answering that for me, guys. Now another question here. So, of course, as we all know as well, the U.S. and Canada have recently lowered rates, of course, to try to increase economic stimulus. Now, I know we don't really have any or too many financial companies under coverage in our research, but do you think that there's going to be a concern for insurance companies and banks as, they're possibly going to get into trouble not getting that net interest income with interest rates being low? Any thoughts
one thing for sure is that there is going to be historic levels of stimulus to shore up the banking system, because if the banking system fails, it brings the entire economy down with it. So the government does not want that. So right now, banks are allowing people to defer mortgages, defer mortgage payments, I believe up to 6 months, because they know that a lot of people are going to be losing their jobs. A lot of people who will continue to have jobs are going to be trapped in their homes and not able to go to them potentially. And a lot of renters aren't going to be able to pay their rent. And this is going to be something that continues for at least the next several months. So the banks don't want to foreclose on 50% of the properties across the country. Obviously, that wouldn't be good for them. It wouldn't be good for the economy. So this really comes down to a government problem in terms of making sure that the banks, the big banks anyways, stay a going concern. Now, that doesn't mean that the banks won't be expected to bear their or a share of the financial pain. I'm sure they will. Banking has always been seen as a great place to get a stable dividend that grows over time. And I would not be surprised if banks decide that they have to suspend dividends temporarily as we get through this crisis just to retain more capital. Now, that wouldn't necessarily be a horrible thing if they only do that for a period of time, like say 6 months, and then they reinstate those dividends once we're in the clear. But I would say that in the financial space, there's certainly there's a huge amount of uncertainty. Nobody knows exactly what what the solution's going to be or what the fallout's going to look like. We're just going to learn that over the next couple of months here. But it's not going to be a problem that the banks are going to be expected to just bear on their own. They're going to need support from government coffers. Let's just say the government's going to have to wave their magic wand and create some money out of nowhere, I guess. Which you can do for a little while, but it stops working once people lose confidence in the buying power of the currency, and then you get hyperinflation, and that causes all sorts of problems. So,
yeah, and in the U.S. In the financial crisis, they quasi basically recapitalized their banks, so they are supposedly in a better position. But again, it's the same type of thing. They're not going to bear the brunt of the full brunt of any financial crisis that is there, because they are, you need that banking system to be operating. So,
and they would fail.
Yeah.
They would fail if the banks aren't designed to be able to last a year or more with people not paying mortgages and rent. I mean, I'm not saying that's the time period that will be in this trouble. I'm just saying that nobody knows for sure. Nobody can pinpoint for sure how long it's going to take to get out of this. And this is a societal issue. I mean, this is an issue that all of society's dealing with. So anybody who's saying, well, you shouldn't bail out the banks. Well, I don't consider that bailing out the banks.
No.
That's just putting policies in place that support society from completely collapsing and our economic system from collapsing. I think that can be done, but I think that there's going to be financial pain. I think that we'll adapt. I think that the economy will adapt. There'll be some winners. There'll be losers as well, obviously, but I think we will adapt over time. It's just a matter of, what that period looks like and how long it lasts, and nobody can say for sure right now.
Yeah, and like you said, this is a societal issue. We're talking the financial side, but as a society, we really do have to come together. And we can do a small part by just saying to any of the listeners out there, just like, if you can, just stay home. If over this period, if we can, 2 to 3, 4 weeks, a month, if we can just stay home and really take it seriously, practice that social distancing. In front of my house here, we have the largest pier in the country. And over the last 5 days, it's been packed on sunny days out there, people walking down that pier. So the largest pier in Canada, packed. I mean, come on. Get some common sense, give your head a shake, practice the social distancing if you have to go out. But is it really that difficult to, if you can, stay home for 2 to 4 weeks with your family, get to know those people a little more maybe, see who is in your family, spend some time with your family. And this is what we have to do. Like, I've heard this many times, we are not asking society to go off to war. Like our kids to go off to war or anything like that. We're asking you just to stay home. It's not that difficult. I understand governments can help out. That's where governments can step up and send a check to everybody, give some rent, holidays. It's what's needed in the near term. But if we can stop the curve, flatten out the curve, as people have been saying, just do your part and don't be stupid. You don't have to do everything right now. Yeah, that's all we need.
Yeah, good public service announcement.
And I think that there is an opportunity long term here for people, societies, countries to get together and cooperate so that we can get ourselves out of this, get through the healthcare crisis, and then get the economy going again. And that's going to be a major task. But I think that it's an opportunity for us all to do our part. And work together and cooperate to achieve that goal. And I'm confident we can do it, and I'm confident we will do it, because I believe that human beings are very well incentivized to cooperate so that we can grow our economy, we can enjoy a good standard of living, and hopefully some security as well for our families.
Yeah, and pull off that Band-Aid quickly. Don't just pull it off slowly. As governments, individuals, get it done. Spend some time at home if you can, and let's stop the spread. Okay, that's what I would say. I'm going to thank Aaron and Brennan for co-hosting with me this week. I'm going to wish you all profitable investing out there, and be safe, obviously, and we'll talk again at this time next week.
Yes, profitable investing. Most importantly, be safe, stay healthy.
Thanks, everybody.